Let's discuss a balance sheet in more detail. Remember, a balance has to balance, okay? It's a scale. All right. So a balance sheet will tell you what stuff do I have and do I own it or do other people, okay? And so everything in this world is owned by you, somebody else, a bank, a company, or government, right? So let's go through this. So the stuff that you have is money, a factory, and a car. And in terms of who owns that stuff, it's either the bank, right? That rich dude smoking whatever it is he's smoking, and then you, okay? And you're also that gold person there. This will make more sense in a second. All right, so stuff I have, who owns it? Okay. And the stuff you have is called assets. Those are your assets, okay? And who owns those assets? That's called liabilities and equity, okay? And so assets is, again, stuff you own. Liabilities is a bank that owns your stuff. And then equity is people that own your stuff, including yourself, okay? And so assets has to equal liabilities plus equity. And so I'll give you an example. That car there, let's pretend it's a Toyota car, okay? You own it, right? Well, you finance it actually, right? So you own part of it. So that car is equal to the amount you own of it plus the amount the Bank of Toyota is financing you with it. Same thing could go for a house. That factory pretends it's a house. You own that house, right? It's owned by Wells Fargo, partially, right? Big mortgage company, for example, and you. And so everything that's an asset has to balance with a liability or an equity position in that asset. And so the scale has to always balance, okay? And a balance sheet is a snapshot in time, okay? It just tells you what do you own or what do you owe at this moment.